Alright, and welcome back. I swear I've tried to record this video like 12 times, but I keep on finding more stuff in price that I want to include that I think are important. But here we have another case study. This area in price is very nice. Like these case studies are definitely worth doing. And if you just want to go in your own charts, and if you want to see like what price does, because you're not gonna retain anything if you just watch me doing it. But if you go into your charts and if you look over these areas in price, you're going to get the most out of it. But as always, I'm a developing student, and these are just my interpretations on price. And then big thanks to ICT. So let's get straight into this. And yeah. So already see here on NQ, what are we currently doing? What is current order flow? If you zoom out, I didn't include it in this slideshow, but if you look at the other slideshow, you can see that current order flow is still bullish. We keep on respecting down close candles. Right here, we have two down close candles that ends up retracing into a PD array to balance it. As you see here, we have repricing higher here. And notice what we have here on the daily chart. We have this order block right here. So we now have had a change in state delivery on the daily chart. So that's going to be very significant in today's price action. As you see here, once we drop down, that level is going to be more significant. But this is a nice possible IRL to ERL trade setup that you could frame out. And if we drop down to 1 hour chart, as always, you should probably do your annotations before I do mine. So here's the 1 hour chart, and what I do want to show up first is the 3 averages. So as we see here, this is the same time off all indices, and if we look at the indices, what are we doing? ES is making a higher high, YM is making a higher high, and NQ is actually making a lower low. So that's your Kraken correlation, that's your SMT, and this SMT doesn't mean anything unless there's a solid framework around it. As we see here, we have solid framework around this. It's happening at a certain time of day around market opens. It's happening around these key PD rates that we have here, and we're gonna drop down. And we're gonna see what those PD rates really are. So that's your SMT. I want to point that out. And here is the 1 hour chart here. So we end up having a bullish fair value gap from the other day that we end up still respecting. This is constant encroachment of that fair value gap. As you see here, we end up respecting constant encroachment very nicely, and we end up reclaiming this fair value gap. Although we have already mitigated this fair value gap, this still holds of significance for the algorithm. And then here we have generated buy side above here, and then this level right here is that daily bearish fair value gap from the other day. Let's zoom out to the daily chart again. Here's that bearish daily fair value gap right there. So this has already been mitigated, and that's going to hold up significance in the lower time frames. And then we have buy side liquidity up here. And what I also want to point out on the hourly chart, the fact that we have this SIBI right here, and then we have this high engineered right above this SIBI, that's going to be high probability for a draw on liquidity. So whenever we have an imbalance right below a fair value gap, the market's going to likely draw towards that, and this is just a good example of that. What do we end up doing? We end up heading the draw on liquidity, and then price just consolidates for the rest of the day because we've already done what we needed to do. We've already repriced to this inefficiency, so therefore we don't really need to do much here. And right here, we end up having those signatures in price as discussed. And here is the 15-minute time frame, and we had 8:30 news here. We had a retail sales, so that's why we had volatility within here. But yeah, this is a blank 15-minute chart, just with those higher time frame levels transposed. As we see here, we have that 15-minute imbalance here. And here's that zoomed in with annotations on the 15-minute time frame. We end up coming back up. We have a balanced price range here. We have fair value gap in, fair value gap out. That becomes a balanced price range. If we are bearish, at least for short term, we are going to respect this area and look at the wicks around this area. We end up completely respecting these down close candles or this balanced price range. We come back up, generate buy side, then we come back down, generate sell side. Then we come back up, and then we end up forming a sort of market maker model here. 15-minute IRL to ERL, very nicely there. We end up taking buy side here, and then end up coming back down to sell side here, and then forming that SMT, and then market open just rallies. All right, and here is the other 15. This is the 15-minute chart, and I just wanted to map out midnight open. So as you see here, throughout the day, we end up having midnight open. We end up accumulating, and we end up manipulating below midnight open price. So this would have been a very high probability to look for longs within this area because we are below midnight opening. All right, and here is the 1 minute delivery This is the 1 minute delivery on that 8:30 news. So as we see here, what do we have here? We have low resistance liquidity. We have low resistance liquidity. This line here maps out the 8:30 news. And what are we doing here? What are we doing here? We're coming up. We're engineering highs here. Then we're taking buy side liquidity here, probably within this imbalance here. So if you look at that, and we come back down, we take sell side liquidity. And then we take that within this imbalance here. We respect that nicely. And then we come back up to take buy side here. And if you zoom out to the 15-minute time frame, it's the same thing. We're coming back up to take buy side liquidity. Then we're coming back down to take sell side liquidity to then have big displacement. So this is called the double purge. I don't really care for names, and I don't really care like who created it, but this is like double purge. I don't really know too much about it. I haven't really dug too much into that theory, but I think it's MMXM trader, so big shout out to him. So yeah, we have another double purge, and then we come up taking buy side here, repricing all the way back to sell side liquidity, forming our SMT at a key point in time, and then we end up displacing here higher. And this is just a 5-minute chart. And here is that 1-minute chart here off that news delivery, and we zoom in a little bit more. I'm not really going to like to engage in this, but this is just always a case study. We end up forming fair value gaps in, fair value gaps out. This is a balanced price range. If we are bearish, we should respect this. And notice what we end up doing. We don't even need to reprice higher here. We end up just staying within this breaker. At the same time, ES actually trades up into this fair value gap here. So there is an SMT divergence with a fair value gap, SMT fair value gap right there. NASDAQ doesn't need to reprice higher, and then we end up displacing lower to that drawn liquidity here. All right, and then here's another 15-minute chart, and I'm just showing the respect to these levels. Like, these levels are still going to be important, and I don't know why. That's kind of bugging me, the fact that I didn't draw that out here, and the fact that we reaccumulate within that daily fair value gap. But this is the 1-minute chart here. And notice market open. Market open was very speedy, very quick, because we already have all the framework around this. We already have done max damage within the market. Like we see here, we've just knocked out traders that are trying to catch this news expansion and daily expansion. We've taken sell side, then we take buy side on the lower time frame. And then if you zoom out to the higher time frame, what are we doing? We're taking buy side, then we're taking sell side. And then we form SMT within a key PD rate within a 15-minute balance to then expand higher. So like we've already done everything that we needed to do at market open. So that's why that just explains why market open just expands so rapidly, because we don't need to manipulate anywhere. We don't need to have a Judah swing within the market because we've already done the manipulation that needs to occur here at 8:30 open. So therefore 9:30 open is able to expand as rapidly as this. Normally I would look for a 9:30 Judah swing. That's normally what I look for. But the fact that we've already had manipulation, we don't need that to happen. All right. And then also what I do want to know out here on the 1-minute time frame is we have this balanced price range. We have fair value gaps. We've offered buy side, then we offer sell side. So therefore, if we are bearish, we should respect this area. As you hear, what do we do at market open? We end up displacing higher. We end up disrespecting this balanced price range. So therefore, this shows that we're not bearish. Anytime that we disrespect a balanced price range, that tells us. And right here, we end up come back down into that 15-minute inverse for value gap. Now we've now displaced above that 15-minute for value gap, and now it becomes inverse. And also, what are we doing? We're coming back into this balanced price range right here. This balanced price range right here. And if you zoom in as close as enough and want to have like laser focus, we end up repricing right to this 1-minute for value gap right here, to then have a nice market maker model. And also, I wanted to throw this in here because this is what I failed to see when I first did the slideshow. That's why I've done this so many times. Is this daily order block? We've now had that change in state delivery above this daily order block, so this level is going to be of very high significance. If you were to just trade one thing, just trade daily order block levels. We end up coming back down to that daily order block, and this is that same level on the 5-minute time frame right here. Daily order block. Look at how well that gets respected. But not only is just that daily order block level, you have all this context and framework around why we should respect that. That is how you get high probability setups. We have all this evidence supporting the one-sidedness within the market. When the market is as one-sided as it is here, that's when you can look to engage. And when it's not looking like this, don't even look to engage. Like, don't even sweat it. Like, there's always gonna be another day. This is why I'm doing these case studies. Is I want to prove to myself, most importantly, that these things repeat and that these things will be a repeating phenomenon. And this isn't just a one-time thing. So therefore, if you do end up missing a setup, Just take a deep breath, bro. There's always going to be another setup within the market. There's always going to be another opportunity. And when you think that, oh, you want to chase it, oh, you want to pass your funding, you want to make money right now, just relax, bro. Just take some time, enjoy the ride. And that's what I'm trying to have come in terms with is just enjoying the ride, because there's always going to be another setup within the market. There's always going to be something else that you could that you can find opportunities. Say you miss this big expansion within the market. Oh, traders are probably think, oh, I just missed this big expansion move. Chillax, bro. Calm down. There's going to be more opportunity. And say you miss this whole day in price. Okay, so what? There's going to be tomorrow. And I can guarantee you that tomorrow's price action, when we do this case study for tomorrow, it's going to be an opportunity that you probably could have got. Probably could have looked to get in. So I just want to throw that in there. All right, and here, I know this is kind of cluttered, but here we're coming back down to this 5-minute breaker as well, an area of fair value within the market. We've offered sell side here, sell side delivery. Then we offer quick buy side delivery here. Then we come back down, we reprice here. If we want to go higher, if we have intention to go higher, we're going to head higher. And notice what we end up having here. Institutional overflow entry draw. Boom. Right to buy side. And here I want to mark out that 5-minute change of state delivery on the 5-minute, and look at this down close candle gets supported very nicely, and then we have expansion within the market. All right, and here's another 4-minute chart, and here's delineated. We have another same concept of this double purge, I guess. We have buy side taken, then we have sell side taken. We're causing max pains on both sides of the market. We're enticing turtle soup traders. We're enticing breakout traders, and we're turtle souping this high to come back down to turtle soup this low. Look at the wicks. The wicks are doing the damage. Come back down to this breaker. Very, very nice. Within that 15-minute inverse for my gap on that daily order block level, that is what makes this high probability. All right, here's the 3-minute chart as well. Pretty much doing the same thing. All right, and here is the 1-minute chart right here. And I swear I had a chart that had the 950 macro. Sorry, y'all. I swear I had I guess I didn't delineate the 950 macro. I have it within here. I think I have it further than the slideshow. As is here, the 950 macro, we end up accumulating within this this 1-minute fair value gap and right on top of that 15-minute fair value gap. So if you were to look at this in terms of the 950 macro, just where we're at in price, it just isn't the highest probability, but there still is like a significant move in price. We don't come back up, 950 macro, and then 1010 macro ends here right when we take buy side, and then we come back down, reprice lower to sell side. So there was just that. So right here, we end up taking sell side liquidity, market structure shift, pullback, imbalance. Nice 2022 model. If you just want to keep it simple, just stick to that. Nice 2022 model, sell side taken, market structure shift, imbalance here, and then we have that 1-minute order block with that daily order block level. I don't have it written out on this chart, but we have that daily order block level, and we have this nice 15-minute fair value. Look how nicely this gets repriced too, as well as this fair value gap right here. Draw that on time, boom, perfect delivery here. Market structure shift, change state delivery right here. We come back down, we retrace here. Right at a certain time of day. Notice when this expansion happens within the market. 1050 macro, boom, perfect delivery here. And then I'm drawing out this inverse for value gap. We then close above it. This gets reclaimed as inversion. And we have another breaker within the market, and we reaccumulate right within that breaker, within that daily fair value gap as well. And then boom, we end up coming up to buy side right here. And here are just some standard deviations, projections that I have mapped out. As you see here, we have this fulcrum point right here, and then we have this retracement right here. The reason why I don't have the last manipulation move is because it's not as clear. I would likely use this manipulation move from this high here as that last manipulation move. Negative 0.5 is just a nice little low-hanging fruit objective, and then we have negative 2 and negative 2.5, and then we have these other levels here on this retracement. All right, and here is the PM session silver bullet. And the reason why this just doesn't offer too much in terms of points or in terms of moves is the fact that we've already taken the draw on liquidity. The objective has been met. Whenever the draw on liquidity has been met on the higher time frame, you're going to get action like this. Although, hey, maybe there might be a silver bullet trade within here. Hey, maybe there might be something that you can pull out within here. it's just not going to be high probability. High probability. The market doesn't really have a reason to move. But if you really wanted to break this down, there is likely a setup that you get here. As we see here, we have taken buy side liquidity here. Then we have displacement. We have market structure shift, pullback, fair value gap here. That's your silver bullet right there. Fair value gap here. Stop at this high. We end up having to stop rate, and then you end up targeting this low resistance liquidity. So that would have been your silver bullet, but I wouldn't look to really engage within this because we've already met our drawn liquidity. And now this is just a 5-minute annotation. Sorry, it's 5-minute annotation. As you see here, we have this beautiful delivery and price. When you break it down like this, like this just might look like a normal chart, but if you break it down, you're able to get a lot of points in what the algorithm is going to refer to without the day. And this would have been a nice expansion move at around at market open. We end up having New York expansion, and then we have IRL to ERL. It's beautiful trade setup, beautiful setup for this day. And as you see here, we have this fulcrum point here I have mapped out, and we're kind of within these levels. Oops. Sorry, y'all. Yeah, but here's just another standard deviation projection that I have mapped out. Oh, so here's the 950 macro. I knew I had it somewhere. So here we have this fulcrum point here, and then we end up repricing right to negative 0.5. I don't know why this is at the end of the slideshow. And then we come back up into this 950 macro. 950 macro, we kind of start to accumulate, and then we distribute higher, right to buy side, then sell side takings right within this fair value gap. So I just wanted to note this negative 0.5 standard deviation. Yeah, and that's pretty much all I have for this case study. I appreciate you guys for watching this, and yeah, we'll look at the next fractal price, and just this price action has been very nice where we've been at, and yeah, definitely worth the study and worth studying.